Stock in Chinese technology giant Alibaba Group Holding, BABA, B-A-B-A, has climbed by 40% so far last year, as the company has benefited from the growth of online shopping in Asia. The strength of China's e-commerce sector, even before COVID-19 pandemic shifted retail online around the world, has attracted the attention of investors. In this video, we will check out Alibaba stock price prediction 2021. Number 8. Stock price forecast. Alibaba stock looks to have more upside potential than many of its peers. It's up only 20% over the past 12 months. In contrast, JD stock is up 140% and PDD stock up 450% during the same period. BABA stock has a consensus Wall Street price forecast of $322, which implies more than a 20% upside. The most bullish analyst on Wall Street has a 397 price forecast on the stock, which implies more than a 50% upside. The 52 analysts offering 12 months price forecast for Alibaba Group Holding Limited have a median target of $325.68, with a high estimate of $406.95 and a low estimate of $247.15. The median estimate represents a plus 43.29% increase from the last price of $227.29. On average, analysts forecast that BABA's EPS will be $7.69 for 2021, with the lowest EPS forecast of $7.46 and the highest EPS forecast of $8.05. On average, analysts forecast that BABA's EPS will be $9.49 for 2022, and the lowest EPS forecast of $9.04, and the highest EPS forecast of $9.84. In 2023, BABA's EPS is forecast to hit $12.09, minimum $11.53, max $13.13. New York Stock Exchange BABA. Alibaba's forecast annual earnings growth rate of 9.99% is not forecast to beat the U.S. internet retail industry's average forecast earnings growth rate of 18.57%. And while it is not forecast to beat the U.S. market's average forecast earnings growth rate of 22.09%. Alibaba's earnings for 2021 is $24,304,128,440. Number 7. Why 2021 could be a good year for Alibaba stock. Alibaba's business continued to get stronger even though it faced the government crackdown. The company had strong holiday sales. As the dust settles from the crackdown, the focus should shift to Alibaba's fundamentals, which remain strong as ever, if not better, as China's economy continues to recover. Alibaba controls almost 60% of China's e-commerce market. As a result, the company is better placed to capitalize on China's massive and still expanding e-commerce market. Alibaba is also big in online advertising. Businesses are going to ramp up marketing to try to bring back sales lost during the COVID-19 pandemic. A large percentage of the online marketing budget in China will end up at Alibaba. Alibaba ranks among the world's top cloud computing companies. It stands to benefit from the expanding cloud market, where spending is forecast to reach $928 billion in 2027 from $265 billion in 2019. Cloud is a lucrative business, as we've seen from Amazon's numbers. It means that a big break in the cloud market should deliver a major boost to Alibaba's bottom line. Ant Group has agreed to the changes that the regulator sought, which might pave the way to revive its IPO plan. Alibaba owns 1/3 of Ant. The IPO promises to boost the value of its holding in the business. Since most of Alibaba's business comes from China, it should do better in a stronger domestic economy. China is rebounding strongly from the COVID-19 pandemic. Its economy is forecast to grow about 8% in 2021. Number 6. Sellers hit BABA stock. Sellers knocked Alibaba stock lower on November 3rd after the $34.5 billion Ant Group IPO was suspended in Shanghai and Hong Kong. The decision to suspend the IPO came as Shanghai exchange officials said it would halt the listing due to the company's inability to fulfill conditions amid changes in the regulatory environment. Sellers were in Alibaba stock again on November 5th after the company reported earnings and missed on sales. Baba stock crashed another 8% on November 10th after Chinese regulators announced new draft anti-monopoly rules for China online platforms like Alibaba and JD.com, among others. It's had a hard time attracting buyers since then. Number 5. Alibaba stock fundamental analysis. With a 5-year analyzed earning growth rate of 29% and a sales growth rate of 47%, it's hard to find a company with a more impressive track record of growth than Alibaba. It's been a big winner since its IPO in September 2014. Expectations were high for Alibaba's Singles Day annual shopping event in November, and the company didn't disappoint as sales nearly doubled from the year-ago period to $74 billion. The company has been able to stay in growth mode despite a slowdown in its core e-commerce business. Alibaba's business in China looks a lot like Amazon's in the U.S. Alibaba's cloud computing business is showing solid growth, just like Amazon's booming web services business. Alibaba also sees dollar signs in food delivery. In 2018, it merged its food delivery service, L.me, with its lifestyle app Kobe to better compete with Tencent, TCEHY, owned Meituan. Sales at Alibaba's digital media and entertainment unit are also rising. The unit includes Alibaba's video streaming platform, Youku, along with its music streaming service, Xiaomi. Alibaba also has a licensing agreement with Walt Disney DIS unit Buena Vista International, giving it access to a large amount of Disney content. And just like Amazon, Alibaba sees potential in the sports streaming market. In 2018, the company partnered with China Central Television and streamed all matches of the 2018 FIFA World Cup. Alibaba also said the World Cup, as well as continued investment in original content, fueled daily average subscriber growth of 200% for Youku. Number 4. Top-rated stock. Alibaba's composite rating of 63, scale of 1 to 99 with 99 being the best, has been hurt by sluggish price performance in recent months. Still, for a mega-cap stock, Alibaba continues to deliver torrid growth. For earnings and sales growth slowed dramatically in May, hurt by the coronavirus breakout. Adjusted profit inched up 2% year-over-year to $1.30 a share, but that was well above the consensus estimate of 85 cents. Revenue increased 16% to just over $16.14 billion, also above expectations of $15.1 billion. But earnings and sales growth accelerated nicely when the company reported earnings in August. Quarterly profit increased 15%, with revenue up 30% to $21.76 billion. Alibaba breaks down its revenue into 4 segments: core commerce, cloud computing, digital media and entertainment, and innovation initiatives. Core commerce revenue jumped 34% to $18.9 billion. Cloud computing revenue increased 59% to $1.75 billion. Mobile monthly active users totaled 874 million, up 15.8% from the year-ago quarter and 3.3% sequentially. Number 3. Top fundamentals. Annual return on equity of 21% and pre-tax margin of 31.3% help its top-notch SMR rating, sales plus margins plus return on equity, of A from IBD Stock Checkup. The Stock Checkup, you can easily see who the group leaders are based on a combination of fundamental and technical factors. For its current fiscal year 2021, earnings per share are expected to jump 38%, with 15% growth seen in fiscal 2022. Etsy, ETSY, is a top-rated stock in IBD's Internet Retail Group, according to IBD Stock Checkup, along with China-based RD.com, RD, VipShop, VIPS, and Shutterstock, SSTK. Number 2. Alibaba Stock Technical Analysis. After a heavy volume breakout for Alibaba stock in late November 2019, the coronavirus stock market crash brought sellers into the stock. But Alibaba, a member of IBD's long-term leaders portfolio, soared out of a 24-week consolidation in July. A 36% pullback for Alibaba stock in the second half of 2018 shook out a lot of sellers in the stock and ultimately served to reset the base count. Alibaba broke out of a flat base of 268.10 buy point during the week ended August 28. It rallied for a bit and then started to pull back with the broad market. A new flat base formed with a 299.10 buy point, although an early entry was seen when Alibaba stock gapped up on September 30th. Number 1. Is Alibaba stock a buy right now? Alibaba stock has fallen more than 25% off its high despite compelling fundamentals. The stock looks like it's on sale now, but is Baba stock a buy right now? Sellers were in Alibaba Baba on February 2nd as Wall Street weighed its latest earnings report. Adjusted earnings rose 30% to $3.38 a share. Revenue growth accelerated for the third straight quarter, jumping 46% to $33.87 billion. Revenue for the company's cloud computing business grew 50% year over year to $2.47 billion. Our cloud computing business continues to expand market leadership and shows strong growth, reflecting the massive potential of China's nascent cloud computing market, as well as our years of investment in technology. Alibaba CEO Daniel Zhang said in a press release, Alibaba stock jumped 3.5% on February 3rd after the company's fintech arm, Ant Group, struck a deal with Chinese regulators to restructure and become a financial holding company. Ant Group operates a suite of financial products, including the widely used Alipay digital wallet in China. With Alibaba stock still far off its high and below its recently converged 50-day, and an early entry would be seen if Alibaba stock can move above its recent high of $274.29. Do let us know in the comment what you think of this stock. Please subscribe to the Stock Advisor. Thanks for watching.